Hello everyone and welcome to the second TTG virtual seminar. We received a really fantastic response to our first seminar 2 weeks ago, so we're thrilled to be back again with a host of new speakers and new sessions which we hope will provide useful advice and tools to help keep your business alive during these tough times. In addition to today's seminar, we do also have a raft of events going on at ttgmedia.com, from our agent-focused Facebook Lives to a regular business support Q&A function on our Corona Business Support Forum, and many face-to-face events as well on our Facebook pages too. So please do check out the events page on ttgmedia.com. Today, though, is all about providing you with tools to support your business, your colleagues, your employees over the coming weeks and months. This situation continues to have a devastating impact on a number of industries, and travel is most certainly one of them. We're going to be starting today by examining the new landscape in travel with a presentation from Chris Photi, Head of Travel and Leisure at Hart Associates. We'll then move on to explore the bigger picture with a panel of experts who will discuss the wider travel industry and the myriad challenges facing it, from airlines to operators, and critically, what's being done behind the scenes to support the sector through this crisis. We'll follow this with a legal update with a panel of experts exploring the most pressing legal issues facing the industry, from refunds and how best to communicate these to clients, to employment law advice and the latest from the government, or not, on the package travel regulations. The afternoon will conclude with a session entitled A Different Perspective, where we'll speak to 3 different tour operators, Jet2, Gold Medal and Travel2 and Keone, to find out about the challenges and difficulties they faced, how they've worked with agents to overcome these, and how they believe the travel industry will change going forwards. Before we begin, just a few housekeeping bits. The seminars have all been pre-recorded, but they do all feature up-to-the-minute advice. And we are going to be conducting, just as we did last time, a live Q&A after every session with the panelists. So please can I ask you all to use the Q&A function at the bottom of the screen rather than the chat function for the Q&A part. And I will try my hardest to put as many questions as I can to the panelists. We had over 100 last time. I'm hoping we'll have just as many today, but I will try and put as many as I possibly can to our panelists. For those of you who are fans of Twitter, we always welcome any social media love. Please do feel free to tweet throughout the seminar. Just use the hashtag TTGseminar or the One Travel Industry hashtag. And I should add as well that we will be making these sessions available on ttgmedia.com after the event. So please keep an eye out for that, and don't worry about taking lots of notes, because we will make sure they are there. We really value feedback. It helps us make sure that we're serving you in the best way possible. Please do let us know your thoughts about today's event. We'll be sending out a survey afterwards, so please keep an eye out for that. It's time now to go to our first session, examining how the travel landscape has been altered by the coronavirus crisis and predictions for the 2020 and 2021 holiday market. Here we have Hart Associates' Chris Photi.
Good afternoon, ladies and gentlemen. A new landscape in travel. TTG have asked me to have a look forward at the impact of the travel industry in relation to the coronavirus. Before we look forward, I would just like to briefly look back, look at the current situation, and then we can get the crystal ball out and see my view of what possibly could happen in the future and how the landscape of travel might change. First slide, travel, inherent risk and uncertainties. Why am I raising this here? You'll have to forgive me, a bit of accountant's technical stuff here. But as far as large travel entities are concerned, they need to generate with their annual report to shareholders and other stakeholders, part of their audited accounts, a strategic report, which has certain statutory requirements. And what I've done is just go back a few short months with an extract from one of the top 5 publicly quoted travel businesses whose auditors are one of the top 4 firms. Now, when generating a strategic report, and directors have to take their responsibilities carefully with regards to disclosing risks, inherent risks and uncertainty that any business has to face. And in turn, auditors, and my firm acts in that capacity, they have to assess what's in that strategic report and consider whether that accurately reflects that particular business's risk. Now, just using this one specific example, of this publicly quoted travel company, very well respected, very well run. The disclosed risks were as follows: Brexit risk, security of supply risk, consumer confidence risk, supply chain risk, reputation risk, competition risk, systems and technology risk, people risk, foreign exchange risk, working capital risk, tax complexity risk, litigation risk, and regulatory risk. What is missing? Obviously, pandemic risk. No mention whatsoever of pandemic risk. And I'm not singling out that company or that particular firm, but it just shows how low on companies' agenda was pandemic risk when it came to highlighting risks and uncertainties. So what did that cause? Well, slightly tongue in cheek, I've said it caused the world to be caught with its pants down. And that is absolutely the case when it comes to coronavirus for all areas of industry, all governments worldwide. A lot of businesses would take an approach to a war game risk scenario as far as their business model is concerned. And all I can say, if you wanted the perfect stress test for your business model, then COVID-19 coronavirus is it. So truly a cataclysmic event, which frankly none of us were fully prepared for, as I hope I've illustrated in that simple example. So then, for the present, how do travel companies survive the next few months? Well, I don't intend to labour this slide for a long period of time. I think it was well covered on previous seminars that TTG has done, and there have been a lot of expert commentators refer to these things. My two penneth: cash is king, and it is simple as that. If you have enough money to pay your bills over a prolonged period of time without any income, you will survive this situation, and providing you have sufficient cash to trade into an upturn, you will, I'm sure, thrive when bounce back occurs. This is the real nub of all of the refund credit notes wrangling and petitions by ABTA, etc. in the last few weeks. I think few of us have read anything else or looked at anything else about this one subject. And the simple fact is, it's all about the retention of cash. If travel companies can get a consumer to take a refund credit note as opposed to a voucher, but basically the same thing apart from the technical aspects of ongoing consumer protection, it's all about the retaining of cash. I think by extension, we could go through a whole host of cost-cutting exercises, but I think they're all pretty much self-evident to people now. The only other advice I would give you is make use of all government support schemes that have been made available to you. Some of these are all around cash retention and cash replacement for expenses you have to incur. So we've got the Coronavirus Job Retention Scheme, accelerated statutory sick pay, the ability to defer your VAT, your POA, your tax payments. Certain smaller entities have business rates relief. There are other business support grants. We have the Coronavirus Business Interruption Loan Scheme, initially a standard scheme, loans up to 5 million for businesses with turnover up to 45 million, simply a little later by the equivalent for larger entities. Less well known is the Coronavirus Future Fund, which is going to be launched in May 2020. I won't bore you with the technical details, principally because I have little more than the headline issues, but it's a matching of private investor or institution funding over the last 5 years by government-backed funding and loan notes. And there is also the COVID-19 corporate financing facility arrangements for larger entities. So that's very much a current profile. Warnings here, well, the warnings quite simply are deferral of VAT and tax payments don't mean you don't have to pay them. The taxman will ultimately come back to you and will want his money. And of course, if you take a coronavirus business interruption loan out at some stage, even though there are no upfront costs, even though it's interest free for the first 12 months, your company is going to ultimately have to repay those monies. So factors that you should consider. So now to the future. A bit of crystal ball gazing. Some of these are my views. You might not agree with them. We all have our own ideas. We all have our own aims. We all have our own aspirations. We all have our own businesses and how it affects. So we perhaps like to see things sometimes through rose-tinted spectacles about our business. Some of the stuff I'm going to say now, unfortunately, is going to be pretty brutal. But that is my outlook on the landscape of travel because of as a result of COVID-19, be that for a shorter or a more extended period. We'll discuss that as we go along. So, what impact will COVID-19 mean for travel and for your business? I'm sure most of you are thinking very carefully at the moment about staffing levels. You might be feeling comfortable with regards to furloughing that you've done and are likely to do up to the end of June. But as at the 30th of June, you are going to be faced with issues. When that scheme is no longer applicable, it could be extended, who knows, you might well have to consider your staffing levels and consider whether redundancies need to be made. That isn't good news for anybody, isn't good news for companies that have to lay off valued staff who have a skill set that perhaps has enhanced your business, and it need terrible news for poor individuals who will find themselves without jobs. We've already seen some stark economic commentators about the likely levels of redundancy after a prolonged period of lockdown, of COVID-19, etc. The statistics don't make good reading. Unfortunately, your business, the travel industry, will not be immune. However, some positive things might have come out in relation to your outlook on your business and travel generally. Perhaps new ways of working. All of us are using Zoom facilities, Microsoft Teams, all of these type of things. And even though many of us were used to working from home and using these facilities, perhaps it's been new to many businesses. And perhaps it's been eye-opening to reflect that actually you could probably run your businesses in these ways. In fact, some of you are running your businesses now like this. Maybe there's a thought process around that for you. It will make staffing more efficient in certain respects because people won't be doing 2-3 hour a day there and back commutes. It might engender better well-being, although I'm sure most of us want to get out of our houses at this time, having been locked in for quite a while, but you understand the general principle. And by extension, that could mean a rationalisation of premises costs for travel businesses. No more expensive rents looking at smaller premises, because perhaps you have outlying individuals working effectively from home, as hopefully they have proved during these difficult times. All of the things that we're using in remote working would indicate enhanced IT and IT systems. That's never a bad thing for any travel business. To drag us kicking and streaming into 2020, perhaps we'll use these rather than old-fashioned meetings, travelling, wasting time travelling, etc. And we can enhance time better by utilising these tools, which can be made pretty personal. You're looking into my study here, you can see me. I can see a whole host of people if we have a conferencing facility. I think the other thing that COVID-19 is going to make all travel businesses do is also look at their cash flow profiling. It is clear from the refund credit note scenario that virtually the entire travel industry, perhaps not all of it, but the majority, has a dependence on trading off customer cash. Even the CA liquidity requirements have maintained 70% customer cash at the end of each month, indicates that they expect you to use 30% in the running of your business, your overheads, your supplier payments, etc. As we'll see from the later slides, it's clear that you need to be very, very concerned with future cash flow profiling if we see a second or a third wave of this, or heaven forbid, something like this again in the not too distant future. What about regulatory impact going forward? Well, we have an immediate regulatory impact coming on the 28th of April 2020, namely CAA and ABTA licensing and bonding renewals. What are these organisations going to do? I think ABTA's been pretty transparent about how it's approaching it. It's applying its well-published and well-tried bonding rules, etc. Unfortunately, the CAA has not been so transparent. In fairness to the CAA, I think at the outset a month or two ago, they were like many of us, like rabbits caught in headlights, not knowing what to do. How have they been approaching it? Well, they've been asking their larger members for updated business rules, updated cash flows on a weekly basis, sensitized cash flows, etc. Very, very difficult to assess. How long is this no booking profile going to last? April, May, June, through to September? Who knows? None of us has a crystal ball. I have my own views. Others in the industry have their views. I've heard people talk about perhaps a slight recovery in a booking profile at the back end of June. I've heard the head of consumer protection of ABTA saying, hopefully we'll still get a reasonable proportion of the summer booking months of July, August and September. My view is you will not be taking many bookings until well into the back end of the summer and the early autumn. That's a personal view. And I think for some businesses, you have to expect that you might well not take any bookings until 2021. I'll expand on that a little later. CAA, I know, are contemplating applying license capacity restrictions. Now, what that means is they will renew your license under specific terms, but they will only give you capacity for, say, Q1, Q2 or Q3 of the license, requiring you to revisit by way of variation, thus giving the CAA an opportunity to look at your more up-to-date financial information to decide whether they are going to extend the license capacity. A lot of people have said, well, surely, the CAA might be considering issuing 6-month licenses. That's highly unlikely, and the simple reason that's unlikely is internal resource from them. They have estimated 1,000 licenses to renew in March and 1,000 in September. They are unlikely to put themselves into a position where they've got 2,000 licenses to renew at the September 2020 renewals. I expect the CAA's approach to their liquidity test to be pragmatic at this renewal. I don't really see what other steps they can take. Less pragmatic perhaps by September 2020, because we would have had a 6-month period of an outworking of COVID-19 impact, and that would reflect to us what the models look like, what the funding profiles look like, and it may be at that stage they will be asking for funding enhancements. It's difficult to get lenders and investors to invest at the moment because it's a bit like investing into a black hole. How much is going to be needed? Where does it take us to in order to be able to see the bounce back and normal trading reoccur? However, with a 6-month profile, that should be clearer. Fortunately, we have government backing on the coronavirus business interruption loans, which means that some loans are being made by banks with the benefit of government security of 80%. But expect the CAA to be looking to enhancements to your liquidity at the next renewal. It's a very simple fact, it's a logical fact, but CAA do not like leveraged travel companies. and they often apply security restrictions to a company that is so leveraged. It isn't easy for you to give banks charges over your assets if you are an ATOL holder. In fact, it is almost certainly going to be prohibited by the CAA. You have a requirement under ATOL Standard Term 4.9 to pass any security arrangements or new lending arrangements by them, and they can use their right of veto if the bank seeking to support their 20% of the coronavirus business interruption loan is to be secured by a fixed or floating charge over the assets of the company. I think it is safe to say that there is concern in the whole marketplace. I have concern. It's very pleasing to me that travel businesses have managed to hang on in recent weeks. Is that likely to happen, likely to go on? My thought process is probably not. We are going to see failure impact, and that in turn will impact on an already beleaguered air travel trust fund that was cleaned out by Thomas Cook. And ABTA quite clearly, even though they might not say this publicly, are concerned about the bonding scheme and the potential pressure that a whole host of failures could put on their captive backup insurers. One thing without a shadow of a doubt that's going to come out of this whole catastrophe is that trust funds will come to the fore and will be seen by many as a preferred way of securing stakeholders, not least the regulators, not least ABTA, etc. Trust accounts have not been entirely well supported by the industry purely because of the cash profiling impact we've already discussed. But trust me, when it comes to financial institutions and the regulators, they are going to be pushing companies toward trust accounts. When it comes to the whole aspect of funds, it's companies like trail finders on the beach, travel counsellors, who have already operated substantial trust funds, who have been able to respond to consumer refunds more readily because they've never relied on that cash previously to fund their business on a going concern. One point of controversy I'd like to raise here: ABTA do not recognise trust accounts and have never recognised trust accounts for the protection of non-licensable packages or non-packages. I think that's been a very narrow-sighted view. They rule out that they feel it has the potential for fraud. Respectfully, it's what one of their main competitors does, and that's why they have not extolled these. CA do have ATOL protected trust. It's mandatory for accredited bodies, etc. But by and large, the CA had not liked them as a wholesale situation. Trust me, their attitude has changed massively around this piece, and you'll find them gently pushing license holders to consider the trust aspect. What about bounce back? Well, I think most economic commentators think we're going to have a V-shaped recovery, which means a very sharp fall followed by a resurgence. Many people have said, well, even if that happens, it's back to where we were at best. I hope we get back to where we were at best. I suspect the bounce back will not be a full V-shape, but nevertheless, I think all of us are gagging for a holiday, gagging for a break, and will be after this. So the demand will be there, providing the government, the world, has got this virus under control. The simple thing about bounce back will be it will be survival of the fittest. We will see a reduced marketplace. If you're around at the end of the difficult period, you have an opportunity to flourish. We will see the most dramatic drop in GDP since the Great Depression. And the reassuring thing about this is the Great Depression lasted for 4 years, was followed by a war, etc. Commentators are not expecting that. They're expecting a dramatic drop and then a dramatic surge once this is over. But don't forget, the government has to finance all of this. it only really has two options to do that: slash public spending or higher taxes. The nation is very much behind the NHS, so if there's any hint of slashing public expenditure in that area, that's not going to go down too well. So I would expect higher taxes. Corporation tax rates are virtually the lowest around the EU, one or two lower. There'll be an easy target for government to claw back money going forward. Yes, at the end of this, there will be an initial surge in consumer spending, but unfortunately, that will not be sustainable. Why? Because there will be higher unemployment. People will be more careful in relation to discretionary spend. We also have to consider the medium term. Will there be a second downturn? Will there be a second wave similar to the one that we're experiencing now? Only time will tell. Who then will bounce back first and when? I wish I really did have a crystal ball view on that, but logic dictates that home companies holidaying in the UK are likely to bounce back first and hardest, such things as walking holidays. The enclosed environment holidays favoured by a lot of the parks, etc., will come back fast only the virus is resolved, only if it stands out, only if vaccines available. None of us, I think, will want to be swimming in swimming pools if there is a threat of being infected. I'm not very optimistic about the cruising outlook. I think that is the industry that will come back last. That pains me because I'm an investor into cruising businesses. The outlook for those businesses is not good. We are budgeting on the basis that they will not come back before 2021. I'm sure others of you will have a different view. I respect that view. This is my opinion and my thoughts. What about the impact of financial institutions? Merchant acquirers, credit card companies will want security. One of the key reasons for this is simply Section 75 risk for these acquirers, which has been exacerbated by CAA and ABTA pass-off of all such claims, rather than having bonding schemes and licensing schemes that cover all. A stark contrast is with a client group of mine, which has a UK subsidiary and an Irish subsidiary, same merchant acquirer. Merchant acquirer wants consumer credit protection, wants protection for its consumer credit risk for the UK company, but it doesn't want it for the Irish company, simply down to the way the regulators cover consumers in the event of failure. I predict there will be a scarcity of bonding capacity for new or increased bonds. Insurers are on the hook for the existing bonds, etc. So there is clear reason for them to continue to support as opposed to get a claim, a loss. There is a complete absence at the moment of financial failure insurance. There isn't any in the market. And scheduled airline failure and supplier failure cover will become more and more difficult to obtain. Do not forget, as we've already said, that coronavirus business interruption loans need to be replayed. And that is going to have an impact at some stage on all businesses, albeit more medium term, longer term. There's also going to be supplier failure impact. The airline industry is not doing well, just as the travel industry isn't. If there is airline failures, then aviation availability may well be difficult for travel businesses going forward. There will be a sting and a tail in relation to IATA accreditation. Very few businesses in 2020 are going to post profit. If you post a loss, then along comes IATA and asks for financial security, unless you pay and go as far as your aviation is concerned. And throughout all of this, from all of these financial institutions, from the regulators, there will be a concern over the use of customer money. This will become a recurring theme in the travel industry without any shadow of a doubt. Prepare yourself for that. My final slide is just warning of the future and what may or may not happen. I've headed this PTR and CAA reform. The ATOL scheme will have to be reformed at some stage. It is no longer fit for purpose after Thomas Cook, and it will be beleaguered after COVID-19. In my opinion, the PTRs bring excessively onerous obligations. That's a very controversial statement, but this is my long-held belief. This penal legislation almost single-handedly was driven by the CAA, ABTA and ATIPAC. The rest of the EU member states have toed the line, but only after being petitioned by these organisations at EC levels to make this as all-encompassing as it has become. It's reassuring to see ABTA once again operating as a trade association in its fight for its members. Unfortunately, I don't think they've done that historically, particularly in relation to the PTRs. The rest of the EU has shown their reaction to COVID-19. It is now actively promoting vouchers. 9 member states bought into this, many of these long before ABTA and the CAA ever got into motion. I will ask a simple question. Does the consumer buy on protection or price? I'm often asked this at seminars. Do I look for ABTA? Do I look for ATOL? No, I always say I just pay with a credit card unless I'm going to Outer Mongolia where it's difficult to get back from. That isn't to me a sustainable regulatory forum for the UK, unfortunately. I am also appalled at how poorly the CAA has enforced Regulation 261. There is frankly no credible balance whatsoever between travel and airlines when it comes to consumer protection. Why is that? Oh, we only hope the government will take on board what they see and on the 31st of December 2020 will look to rewrite the package travel regulations as they apply to the UK industry and make them more fair by also bringing airlines into the protection arrangement so that we do not have this imbalance where airlines are not paying travel companies back, but travel companies are expected to pay consumers back. Quite simply, the travel industry needs a more effective government lobby. ABTA have tried valiantly in recent weeks, but their history over recent years has not been good. They have failed to get the ear of the government, unlike airlines who have had backing by their lobby by the government for many years. Now is time for a change. We need an effective voice for government that really gets across travel's problems. Pandemic is an inherent risk. And one thing's for sure, going forward, none of us will ever take this for granted again. And I would suggest in inherent risks and uncertainties on your next published accounts, it will be number 1 in the risks that you have to face. Thank you.
Thank you very much to Chris there. Never one to mince his words. A really honest and transparent look, I think, at where the travel industry is heading. Chris is now going to join us for a live Q&A. Can I just ask everybody to make sure that you're using the Q&A function to direct your questions? We've already had a number through, which is fantastic. But yeah, do keep using the Q&A function rather than the chat function to give us your questions. Hi, Chris.
Hi, Sophie.
Hi, thanks for joining us today and thanks for your very stark and honest presentation. We've had
Painful experience watching yourself, I have to say.
We have had some questions through already. I'm just going to whittle through them because we've already had quite a number. Deborah Reed is asking questions about the corporate travel sector, and I just wondered if you had any thoughts about that. I think specifically she wants to know if you've got any idea of when we might see that perhaps start to ramp up. She's saying that quarter three might be the ramp up period. I don't know if you agree with that.
I think Deborah's probably reasonably correct there. I did say on my slide, and it's not just me, a lot of commentators are saying they think business travel will bounce back later than leisure travel. Notwithstanding that, I'm sure at an end of a period of lockout, there will be people that will want to travel the world to visit their clients, visit their markets, etc. But I think Deborah's assessment is probably about right.
Okay. We've got a question from Dagmara. She says, thank you very much for your interesting, if not somewhat dark presentation. I think it's very, very honest, I think.
It's not really my personality. But...
She says, or he says, I share the opinion that cruise sector is hardest hit. However, would you think it's the same for ocean and river cruises? Since river cruise tends to carry so much less passengers, would they see more chance to bounce back faster?
Yes, I think that's a fair appraisal. I don't think river cruising has in the cruiser's mind the images of Petri dish style cruise ships stranded outside ports with very sadly people dying on them. I think that's going to take a while to be eradicated, but I think river cruising probably would be an easier sell going forward.
Okay. We've got a question from an anonymous attendee. I think they're just trying to push you a bit on a point you mentioned earlier. What's your reasoning behind your view that bookings will not be taking place until the end of the summer season or potentially 2021? Well, I guess the government's news about the fact that we might have to social distance until the end of the year was probably a factor in that.
Yes, absolutely a factor. You've kind of answered the question yourself. I hope I'm wrong. I desperately hope I'm wrong. I have seen things, reading the Times, where the Italians are thinking about putting up glass screenings on the beaches on the Italian Riviera, etc. I have difficulty getting my head around that from a social distancing viewpoint. I think travel is not going to see a full recovery until we see improvement in the herd immunity scenario that many governments are mentioning. And I think ultimately life isn't going to get back to normal as far as travel is concerned until we have an effective vaccine.
Yeah, I'd agree with that.
It is a dark outlook, I'm sorry, but that's my view.
Got to be honest though. Ian Brooks, he says, do you expect any clarification on credit notes from BIAS? Not getting any clarification in general from the government, are we?
We aren't. I know Ian well. Hi, Ian. I don't, unfortunately, is again my personal view. I do think ABTA have tried valiantly in this area. I think they've really acted as a trade association when it comes to that. They've seen the need of their members. They've also seen their own need. I mean, this is a potential catastrophic thing for ABTA itself. If many of its members failed and its bonding scheme and captive insurer was inadequate, but I'm not seeing BEIS come through with anything. I think we're going to get some CAA clarification on refund credit notes. I don't think it's actually needed. CAA ATOL cover does continue with the refund credit note. It's clear in the Air Travel Trust policy document, section 4.2. But people seem to want the CAA to come out and say it. But I think BEIS's view is quite simply that the consumer should continue to have the option. It can accept a consumer protective refund credit note and remain protected. But if a consumer wants a refund, I think that's the situation that BEIS want. Notwithstanding that, ABTA have given them a lot more information in the last week or so about the insolvency impact potentially on the travel industry. Let's hope BEIS see it that way, but I'm not hopeful.
Okay. A question from Nick. He says, one of the biggest issues in recent weeks is not only refunding, but 100% loss of profit we make for considerable time spent in researching, designing, selling, marketing holidays. Going forward, do you think that agents and operators will be able to ring fence administrative costs to exist outside the PTRs?
Well, that's a difficult question. I'd need to think about that. I don't fully understand the question. I'm happy to take that offline with the individual if they want to email me.
Okay. Yeah, we'll make sure your email address is available. Gary Boyer's got an interesting point. He says, any thoughts on whether other European countries will start travelling before the UK? Perhaps if the German market will start travelling before us Brits. I suppose there's no chance of European-wide coordination. Well, probably not now. We're trying to exit the EU.
Well, the Swedes definitely will travel before us, that's for sure. That's a difficult one. At the end of the day, it depends upon destinations where you're traveling to. But if you have a feel-good factor in your own country and it is available to you to travel, it is possible that they would be ahead of the game. Some European countries obviously are 3 or 4 weeks further into this impact than we are.
Yeah. You obviously made some interesting comments on trust accounts. We've got a question from Alan, who's saying that, do you believe trust accounts will take over the industry?
I wouldn't go so far as to take over. I mean, this is a possibility. I think the thing that about trust accounts that the travel industry doesn't like is obviously it's cash flow restrictive. But the whole issue that the industry is facing at the moment is cash flow profiling. And if you've used customer cash and are now being made to give it back to the customer, that's what's causing the issue. That's why ABTA have come out so positively in relation to refund credit notes. But I do think trust accounts are going to become more commonplace. I mean, the thing about a trust account is it protects not only the consumer, but a variety of other stakeholders. It obviously protects regulators. In the case of the CAA, I actually said ABTA in my presentation. It was just a slip of the tongue. ABTA don't accept trusts in any form. But it also will cover things like merchant acquirers. If you've got a trust account or you're a member of one of the associations that operates trusts, the merchant acquirers are not taking your facility away or stopping your facility because they are protected by them. So, you know, globally, you've got to look at that. A credit card is a tool of your trade. If you don't have the ability to take credit and debit cards, or the security requirements are such that it takes away your cash flow anyway, then looking at a trust solution seems logical.
Okay, thanks, Chris. We've got a question here about the aviation sector and whether they could weather a break in bookings. I think they mean a lack of bookings up until the end of the year. I mean, that's the question, isn't it?
It is a question. I don't have the statistics in front of me. I mean, but EasyJet have certainly published, you know, how much it's costing them at certain points in time. And the numbers are mind-boggling. They are one of the most successful businesses around, most profitable airline, and yet they're feeling the burn. They're having to raise, you know, billions in funding to make sure they're still around. I'm not sure they've got enough funding to last until the 1st of January. Whether they can raise it further down the line is another matter.
Okay. John McEwen raises a point. I mean, you covered this in your presentation, but he's saying that now that the Air Travel Trust Fund is depleted following Thomas Cook, do you think now is a time for an all-passenger levy on airlines? Well, you pretty much hinted at that, didn't you?
Oh, I've always thought airlines should be brought into the insolvency debate from way back. I find it just quite incredible that one half of the enlarged travel industry has to go through all of these regulatory hoops because of the ATOL regulations and the PTRs, and yet airlines can blissfully go along with no protection, and when the proverbial hits the fan, gets the government to write a cheque out for them for £100 million, even though they haven't even contributed to consumer protection. So it's a weird one and an unfair one.
But it sounds like it's going to be the start of another new debate, which has been much needed for several years, really, isn't it?
Well, the debate's been had. It really goes back to my original point about lobbying, and not only that, all around the voucher and refund credit note scenario. ABTA, various other travel organisations, various other travel companies have petitioned BAYS, etc. But the airlines on this particular subject were able to galvanise 38 MPs to support them. Enough said.
Yeah, I mean, ABTA has got a lot of MPs backing its Safe Future Travel campaign as well.
Yes, that's good. As I say, in recent weeks, they've really hooked on to being a travel association. I think the problem has been legacy with ABTA. You know, ABTA has evolved over the years. It was a travel association, then it became a consumer champion, consumer watchdog, events organiser, regulator, very much a travel association as a secondary situation. It's good to see ABTA back being first and foremost a travel association. That's where the change needs to be. They need to stay in that position.
Phil Bloomfield's raised quite a pertinent point. He says, what do you mean by back to normal? I think that's referencing a point in your presentation. Is it realistic to expect we'll return to the pre-COVID days? Surely a different industry will emerge from this. Well, I guess from what we're saying is that this perhaps might be the catalyst for there to be numerous changes, regulatory and otherwise.
Yes, I think that, I can't remember, I haven't got my slides in front of me. I think the back to normal was around the financial marketplace. I think the V bounce back said that at best we could get back to normal. I don't envisage the travel industry will be back to where it is this time next year. I think there'll be fewer travel businesses. The strong will have survived. I think market demand will be down for a period of time. The good news is, though, we all want to travel more. We all want to enjoy more holidays. In a buoyant economy, there is great potential for travel to get back to where it was and to indeed go beyond that. Most benchmarking surveys up to this point in time say we all want to travel more. We all want to do more.
And that's the point, is that when everyone's cooped up looking at the same four walls, the thing they're most going to want to do is go on holiday.
Absolutely. I wrote down the three things I miss most in lockdown. Travel and breaks was one, eating out, coffees out was two, and live sport was three.
Yeah, well, here's to a brighter future. Thank you so much, Chris. I really appreciate your time with this. I am conscious of time, so we're going to have to wrap it up there. But thanks.
Absolutely. May I just say to everybody that's watching, the best of luck for you all with your businesses. You can take on board some of the advice you get from seminars like this and apply in your business and get your business through these very difficult times.
Thanks very much, Chris. It's quite a prominent point to end on. Thanks again for your time, and to everybody that wasn't able to have their question answered, apologies. As I said before, we get a lot through. There are quite a few questions that I can put to our later panels on. I know there were quite a few legal points raised, so I will try and sift through them all and get through as many as I possibly can. We are now going to be taking a short break, but before we do, I would just like to take this opportunity to let you all know to keep an eye out for an exciting new launch coming from TTG tomorrow. The TTG Digital Destinations Festival, in association with WTM London, will feature partners including Tourism Queensland, Vienna, Abu Dhabi, Fiji and Brand USA. More details are going to be announced tomorrow at ttgmedia.com/destfest, where you can register your interest, so do please keep an eye out for that. We are now going to be taking a very short break. We'll see you back here at 3 p.m. for our next session, which is focused on addressing the various different challenges facing different parts of the sector. I'll see you shortly.